Hello everyone. Let's take a look at a couple of trades I made in gold and crude today. It's June 22nd, 2022, and as you see here in the charts, I do have the large bars. Let's review this real quick. So we got let's look at this. This is 820.40. This is the large bars, and use this one as an anchor chart. So I look for direction here if the if it's in synchrony or synchronized or in the same direction as my entry chart. Entry chart is to the right, and the entry chart here is let's see, 1020. Okay, so so let's review the trades. Gold today was $810 profit, fortunately. So let's review what's going on. So let's mark here 8 a.m., which is the time that I start trading. And if you see here, there was already a big move to the upside after some consolidation here in this area in the overnight. So basically it broke here around this level here at 7 a.m. and then made a nice move to the upside, and then made this a top on the pivot in here. This is a significant move. So so you have to be careful to trade when you are back in this zone here. So here you in this area, let's see if this tool works. Yes. So let's put it so in this area, okay, so this area is kind of like a area of consolidation, so you have to be careful on trading in this area. Here there was a really nice good entry right there, right there. There was a good entry, but it's a 200 bounce, so a week out of the 200 and then start moving up. This one is a solid good entry. I did not take it because it was normally these are in the areas of consolidation, but anyways, let's review the trades I made. Okay, so first one here came at 8:41, so 1 minute after the 20 minutes. Gold market opens at 8:20, and then you count 20 minutes or 40 minutes from the open, and then you have a break, a area of an area of what it's called the opening range. So 20 minutes is for gold. Okay, so this area here is the opening range, and go all the way down here. You have from 8 a.m. to 8:40, from 8:20 a.m. to 8:40. So let's put also right there. That is 8:40. So at that time, now it's bothering here. Let's delete it. So let's open this one a little bit, and I'm gonna synchronize it so you can see what's going on in the left side as well. So let's see here. So in this area here, you're breaking out of this two double top. Basically, it's not marked in as a double top here because there's a kind of like in between area here, but this one is clearly a double top. Went out there, moved down, made a bounce on the a 34 EMA, and then three bars later triggered the entry. So I put the entry for two reasons: the double top and also moving away out of the opening range for the 20 minutes opening range here. First target met $200 right there at 1846. 1846. Let's see. 1846.70, and then this one is another $400 at 1848.70. So that one is $600 profit on that move right there. Then the market came back down and entered into the opening range again. I made a couple of good weeks there. This one, it would be a counter trend. You can take this one at higher risk, but it kept moving down all the way to the 200. And then from there, went again into the opening range and moved all the way up. Now, there's another entry right here, a week out of the 21 and out of the opening range. I did not take it. I wait until it broke above this pivot high here, and then this one was good for $200 there. So entered at 1847.90. I believe it is 90. Yeah, 1847.90, and then it was sold at 1849.90, and then I was stopped out at 1848. Okay, so that one is kind of a break-even trade. It's actually $10 there, so $210 in between the two trades. So in between the two trades in gold is $810, and that's all the trades I made today for gold. There was some consolidation here. You can argue that you could take this one here, but it you know, the moving moving averages are consolidating and moving you know, are consolidating here. They are not expanding. So there was a couple of attempts to break here, creating a double bottom here, but there was this week this pivot right here that it was significant also, and so it didn't break, and it, you know, the most of the day in the afternoon it was kind of consolidating until the close. So those were the two trades, so one here and one there, $810 there. Not that much action, not that much direction in gold. If you see the daily, let's put the daily here, daily chart in gold. You see that it's in consolidation in between the opening range of the month. This is the first day of the month, and I marked the top and the bottom, and you see it's been consolidating around this all the way. Now I do have this channel that is a descending channel that was created in you know, in between these two prices here. It's trying to break out, and it has not done yet. So you know, it's we consider this one as a channel move until either breaks or range move until it goes out of this channel. There has been a, let's mark here in the, you know, this is, oh, okay. It seems that it didn't mark my. Okay, now let's try this. So it's been consolidating in this area right here. So it's moving sideways, gold. It lacks of conviction of either moving out or down. If I had to bet what is going to happen, probably it's going to, because of the channel, I would bet that it's going to go into the lower part of this. But you know, you never know. It could break to the upside. But so that's why you have to observe it. Okay. So let's go to crude. So this one is the anchor chart in crude, and you see that there was a move to the downside overnight, and then bottomed here. Then the opening range was in this area, and then moved up. So let's see the trades in here. There was some congestion that I trade in here today. Let me expand this a little bit more so you can see it, and let me also synchronize this one in a global. Okay, let's look at this. And okay, so this is the consolidation area down below. You see, I'm sorry. So let me expand this a little bit in this area. Okay, and you see that there is consolidation. So the market bottom around this area here. If you look at the anchor chart as well, you see that there is a higher low here and a higher low here, and then move to the upside. I did not trade any of this stuff until it kind of broke out of this resistance here. So let's mark that one. You know, so there's so I tried to trade that one there, and it didn't work. You know, that breakout didn't work very well. If you see in the left side of the in the anchor chart, in this area here, let's put an arrow there. So in that way we identify it in the other side as well. Okay, so you see that there's an arrow there as well. So okay, so here it didn't work. It went all the way down and it stopped me out. That trade there was $70 loss per contract, so it's $140 in between the two contracts. Then I tried to enter that one again a week out of the 21. It didn't work either, and then that one stopped me out once again, this time for $190 per contract. That one is $380 down. And then I tried once more in here. Third time, I thought it was going to be the winner, and it was not. That one was another loss for $110 per contract. So that one is $220 each. So at this moment, I was down $740 just because I was trading in the consolidation area on these three. But then I made one more attempt here. So that one was good, and this one I entered this one at 103.12, and then the first target went off for $200 at 103.32. And then the other one, I ran it all the way up here, and this one was $610 profit there. When it reversed the first sign that it was going below this last bar, then I sold it, and then the market kept moving up. and I didn't enter this one. That one would have been a good entry as well. So moving sideways now, that one would have been one target out. This one would have been one target out as well, maybe. Yes. This one another target. And let's see. And then there's another trade I made here. You see everything is going to the upside here. You see the in the anchor chart, you have bullish sentiment, and then there was another break here in S3. So this is support 3. You are way below the pivot channels. You see here the pivots are right here, and then here you do have the S3 level. So where did it go again? This is probably the end of it. Yeah. So let's see this setup here. This is a breakout consolidation and breakout of consolidation, right? So you have consolidation here, no trades in this zone for me, and then at 11:24. Normally I don't put trades after 11:20, but this one was kind of like breaking, and it was kind of like already oversold. So I took the chance and I put the last entry here. So this one is 104.96, good for $200 over there, and then kept moving up for another $400. Was it? No, this one was $500 actually. So in between the two of them, there's $720. The first one was $220, I believe. 16.96. No, it's 200 and 610. 610, yeah. So it's $610, and then the market kept moving down. There was another entry here, another entry here. Market kept moving up, I wanted to say. All right, so those are the trades for today. In between the two markets, I traded. I made $1,600 in between gold and crude. All right, so remember, so we are trading in expansion, and we are trying to avoid consolidation. If you do not avoid consolidation and try to break it, to test or to trade within the line, then I mean within the consolidation, this is a consolidation area. You could be chopped out like I was chopped out here, but then finally it broke. So the risk is higher, and sometimes you're chopped out, and that's part of trading. All right, thank you so much for watching.